Good afternoon, everyone, and welcome to today's Payments Association webinar, The Value of Strategic Compliance Beyond the Fines and Penalties. So my name is Berenice Lamblin, and I'm part of the production team at the Payments Association. Before we get started, I'd like to go over a few things. So you can submit your questions to today's speakers by typing your questions into the Q&A tab of the control panel. You can send in your questions at any time, and the panel will address them during the Q&A session at the end. You can ask questions anonymously if you do not want your name attached, and we'll be moderating them as they come through. This webinar will be recorded, and we'll send a link around to watch on demand afterwards. And finally, if you have any technical issues, feel free to send a message through the chat box to Aisha Warris from the Payments Association. I would now like to introduce Davina Suri, who is the UK legal content developer at LexisNexis Regulatory Compliance, and she will lead the panel today. So I hope you enjoy. Over to you, Davina.
Good afternoon, everyone, and welcome to today's webinar hosted by LexisNexis Regulatory Compliance in partnership with the Payments Association. My name is Davina Suri. I am a content developer at LexisNexis RC, and I manage the financial services portfolio for the product. And today I will be your moderator for this session. So today's discussion is centered on a topic that is increasingly vital to organizations across financial services, titled The Value of Strategic Compliances Beyond the Fines and Penalties. We will be exploring how compliance can be embedded into business culture, how it strengthens governance and anti-financial crime frameworks, and how regulation, when approached strategically, can become a driver of organizational resilience. I'm delighted to be joined by three outstanding panelists who bring a wealth of experience and insight. So to start with, Sarah Cass, who is Chief Compliance Officer at IFX Payments.
Hello.
To follow, Ben Westwood, Head of Compliance and DPO at the Motor Insurance Bureau.
Hello, everyone. It's a pleasure to be here.
And finally, Melvin Dillon, Head of Regulatory Affairs and Compliance Monitoring.
Good afternoon, all. Great to be here.
I would like to thank you all for being here. And on that note, let's dive in. Please note the floor will be open to questions from our audience to make this interactive as possible. So feel free to put in questions in between. To kick things off, I'd like to start off by asking each of our panelists to briefly share how their organizations are embedding compliance into the business culture. So not as just a control function, but as a strategic enabler.
I'm going to jump in first. This is something that I'm very passionate about. I talk a lot about it. And I think from my perspective, I think in most of my colleagues and definitely the folks on this call, it starts at the top. It's leadership commitment. And it's not just, leadership commitment. It's about demonstrating the right behaviors and actually living and breathing compliance when it comes to culture. We have some key compliance documentation in our organization that is sort of sponsored by senior members of the business. One of them is the code of conduct that has our CEO's face on, and he has written his intro about how important that is to him. But separate to that, then you've got other policies that we get execs to push out and communicate and make people aware. After that, it's about having open and honest conversations, and I think every organization will have some form of whistleblowing, and that's typically when something goes wrong. But beside that, where else are you communicating with your staff? Where else are you having those dialogues and those conversations? I would share an experience in my career of something that went wrong that I learned from. We wrote a substantively new policy in one business I worked in, and the compliance, legal, risk, and senior management all thought this is a great policy. This is perfect. We've done this. We didn't engage the folks, the business, the people in the organization, and we'd missed a key demographic of people that were severely impacted quite negatively by the policy. Now, what we should have done is have an open dialogue. Now, where I am today, we have an employee forum, and we show new policies or substantive changes to the forum and say, this is what we're looking to do. Can we have some feedback? Can we have, see your thoughts on this? So that actually was something that I learned the hard way through a policy that landed very badly in an organization. And so, yeah, having those open dialogues, continuous conversations with people around compliance, and continually reinforcing what the expectations are, the right behaviors, communicating regularly, via all the channels that are available to us. We've enabled a functionality where we can send a dual sort of branded communication where I'll send something, but it will be a sort of dual communication between me and one of the ExCo members of the business saying, this is important to us, this is something you need to be aware of. And so it's not just yet another email from compliance. It's coming from a senior leader, and not necessarily the chief risk officer. It comes from like chief claims officer or someone like that. So I don't want to take up all the time. I know my colleagues on this call are champing at the bit to speak, but I would say they're the first two things: is senior leadership, engagement, ownership, and leading by example, and then communicating with your staff and having that open and honest dialogue.
Thank you, very insightful. And over to you, Melvin, in terms of your views on this.
Thank you. Great words there. So yeah, good afternoon. I'm Melvin Dillon. It's great to speak with you today and share a few thoughts. Mine are going to be couched especially how having a really strong embedded compliance culture has absolutely made strategic change a success. So a little bit of background. So I'm at Sainsbury's Bank, but I suspect Sainsbury's Bank is in a very different place in their journey of embedding compliance culture when compared to your firms. And I'll explain a bit why. So back in 2024, Sainsbury's has been on a pretty significant strategic transformation journey, whereby our parent, Sainsbury's Group, i.e. the supermarket, decided, actually, do you know what? We're going to do something very similar to Tesco Bank, and we're going to come out of the banking market. And we've been in a process of winding the bank down, where we've been looking for bidders and looking to sell the various books of business. So zooming forward to now, all the deals are done. Books of business have been sold. For example, we've sold our reasonably sized credit card, loans and savings books to NatWest. And I'm really pleased to report that delivering that change in doing so and the migrations has gone really well, almost seamlessly, touching wood to make sure we've still got a bit to do. But turning that back to compliance culture and how that's been impacted. So I see our compliance culture has always been particularly strong at the bank. Of course, I would say that, but in my defense, having been at the regulator previously, that was my view when I was at the FCA and supervised the bank. And one of the reasons that I moved here. So I guess to be specific, I do believe that having a decent compliance culture that's embedded, we wouldn't have delivered what we've delivered in terms of the transformation strategy so far, in keeping our customers safe, and well informed, and keeping our regulators comfortable with what we've done over the last year. That's been massively important. So for those on the call that know anything about a Part 7 transfer, it's a court process, or someone who knows anything about having a material custom migration from one firm to another, you'll already understand it's a pretty seismic piece of work needed from both a technical and operational perspective. But when you have to factor in, you need to get the regulators, both PRA and FCA, comfortable, and you go through a ridiculous level of rigorous challenge to make sure that you're not going to screw it up. We really needed to leverage those compliance characteristics right across the board, from the board, literally, through the executive, and ultimately just through to the people at the end of the phones who are talking to our customers, telling them what's going on, and making sure that they understand the process that we're going through, and that their money's safe, ultimately. So yes, having that culture and where everyone's being measured to do the right thing, being laser focused on managing those risks that we're introducing through that strategic change, but also making sure that we don't lose sight that everything's not strategic change. We've got a biz bank still to run. We've still got BAU to run. We need to manage our customers safely and manage our risks. That's been really critical, because that's one of the things, we want, the regulator wanted us to make sure, actually, yeah, you're focused on all this stuff, but what about your day-to-day customers? So that's important. So look, bringing this to a close and talking to some of what Ben mentioned around people, I think our truest test around our compliance culture as how our people have showed up. Ultimately, the outcome of winding down a bank is going to lead to, in essence, workplace losing their jobs. At some point, we've been a bit lucky. We've got the luxury of time, knowing this is going to happen in 12 to 18 months time does bring an element of comfort and allows you to plan. But that still doesn't mean it doesn't bring the inevitable stress, worry, resentment, and people thinking, stuff this, I'm going to go into somewhere which is a bit more secure and increase resignations. But what we've done is we've seen people show up. Management continue to still care, making the right risk decisions, not taking too much risk just to get this done, and ultimately putting the strategy and customers in harm's way. So, I think as we look to some of the kind of colleague opinion surveys or staff surveys, actually they've been probably stronger than they've ever been, which is mental because people are losing their jobs, but they're being treated in the right way, and that's showing up and I think that stems from the culture that we have here and how people want to do the right thing and see these things through. So I'll stop waffling and hand back, but yeah, really just to kind of talk to that it's been evident really from the people and how we've delivered. So I'll hand back and over to Sarah.
Thanks, Melvin. I think obviously I'm going last, so I'm just going to echo what you've both already said. I think the tone from the top piece and actually demonstrating that, not just writing it down on a policy, is a really important thing for compliance culture. So we're, a relatively small fintech, but we have strategic updates every month from the CEO, and he will always talk about something to do with compliance. I mean, it's so broad, it touches every part of the business, right? So there'll always be something in there or a reminder. And the whole leadership team is really focused on getting that message through. It's definitely not just, the compliance team getting that message out there. And I think one of the ways I like to think about it, when people say how many compliance staff do you have at your firm? And I say 250, because every single person, even if they roll their eyes sometimes about what compliance is, they know what it is. They know what it does. They really do respect compliance, I think, as part of the culture and part of the business, and know that we want to make it really easy. Being compliant should be like getting dressed. We don't want people to have to really concentrate on it that much. It should be easy to be compliant, and we need to make sure that our control environment supports that, and really work as part of the business. Because when you've got that strong compliance culture and you can demonstrate it, it gives confidence to your customers, to the market, to regulators, to your banking counterparties. Is really, really critical. And yeah, I would say that the culture and the tone from the top are the key parts.
Thank you for that. And just a question from the audience, and this is open to the panel. The question is as follows: for global teams, how do you measure whether compliance is truly part of the organization's culture rather than just policy on paper? So again, open to the panel.
Nice, easy question to kick off on then. Yeah, thanks for that. It's a great question. It's one we grapple with a lot. How do you measure the sort of culture of compliance? How do you actually quantify it and be able to, produce even a metric? Because it's a conversation we have with the execs on a regular basis. It's a conversation we have in our teams. How are we actually, how can we demonstrate that we have a certain level of culture and we're improving on it? I've seen different ways of doing this, not always successful. I think one of the few ways which I'm not sure I'd say it was 100% successful is we built into the annual employee survey some questions around compliance culture and understanding the compliance and like a 1 to 5 rating. So we set a benchmark in the annual employee survey around sort of compliance and risk culture. And that allowed us then to say, right, this is where we think we're at. This is what all our staff think we're at. And then what we're going to do to improve that. And it gave us a sort of baseline to start working towards. But again, it's a very difficult metric to meaningfully record or track. And I'm hoping one of my colleagues on this call will give me some better ideas.
I'll jump in. Listen, Ben, I completely agree. It's it's a question that we used to get from the CEOs sitting on the other side at the regulator. Give me some metrics that I can measure conduct and culture in. And the stock answer, apologies if there's any regulators, was, we're not a consultancy, you need to work that out for yourself. So but I absolutely echo, we do similar things relating to questions in colleague surveys around trying to get those indicators. I think possibly not so much of a metric, but I think what's really telling is those discussions, the classic commerciality versus conduct discussions, are always very telling, i.e., are the right people in the room? To what extent does that commerciality have over potentially doing the right thing from a, and I think that's always very telling. I'm not saying commerciality doesn't have to always, it doesn't have to be equal, but I think being able to properly do that risk assessment and being able to put the pros and cons out there, and doing things within that risk appetite are pretty helpful. But I don't know how you would put that in a metric. I think that's really difficult, because I think I'd like to think all those things happen, but how you put that in a black and white, we did this on this day, it's really tough. So for me, it's multiple things that almost become embedded how you operate. Does that make sense?
Yeah.
It does make sense. And Sarah, just one on this. I mean, do you have anything to add for that question that came from the audience?
Yeah, I think it's a tricky one, as the guys have already said. For me, I would always say, and this is very much from having the benefit of working for a small firm, right? Talk to people. So talk to people in those other offices. If you can get people together in real life, I always think that's infinitely better. But talk to everybody, whatever job they're doing, and ask them what they think about it. Do they know about these things? And how do they like to learn? So the other thing with policies written on a bit of paper, sometimes, as we all know, they could be 20 pages. In reality, nobody's actually going to read those. What's the training like? Make sure that you've got different training, maybe in different places. Culturally, there might be differences in the way that people like to learn, or the type of training that they like, in person or online, or can you record it? Are there different ways that you can deliver that training to make it work? Kind of globally, but also it's just making sure everybody's in contact, I think. And some depending on the firm, you could have a kind of international buddy system, making sure that all the compliance teams are definitely connected, all the other different departments are connected, but it's cross-functionally as well.
I totally agree on that point. And following that with just another question, perhaps a bit more aimed at fintech, regtech solutions. Another question is, there is a lot of regtech solutions out there. Has any of these made it easier for you to implement compliance as part of the culture? So I think here is a question now, building that bridge between implementation in compliance and creating that as part of the culture. So yeah, question open again to the panel.
I mean, I could jump in if RegTech, you've got to be very careful. And I've used it and I've seen it in multiple organizations. And in our minds, we think this is going to improve the way people work. It's going to help engage our employees on dealing with compliance. It's going to simplify, streamline, more efficiencies, all that great stuff. And what actually lands is another tool that they don't understand, don't really have time to learn, and only interact with on an infrequent basis. And every time they do, it's sort of like, oh, got to deal with this system again. I've never truly learnt how to use it. We're dealing with that now with a system where the engagement's been poor, and that's because people haven't really understood it and we didn't train it properly. So I think they can, if you really think about the implementation and integration. But I've seen in previous organizations, for sure, just tools being pushed out with limited engagement, or here's a PDF, go and read it. And the engagement and actual frustration we've seen afterwards, it's had a negative impact in terms of how we work with our stakeholders across the business. So yeah, you can have the greatest tool, but if you don't implement it properly or integrate it, people are going to be switched off to what you're trying to achieve. So just be mindful of that. And I won't talk to any of the specific tools out in the market, but yeah, always think about your audience and what they're very busy. Everyone is extremely busy, and you're giving them yet something else they need to learn and engage with and understand. And so, be very mindful of the implementation of anything that you decide to put in as a streamline or a time save or a cost efficiency.
So I can jump in, just to add a little bit of thought. So I did a little bit of work with some of the kind of fintech and regtech forums up in Scotland, and there is some really good work, really good work that it's starting to but they're all in the support phase. That it's not that this stuff does it for us, and I think that's really important. So I guess some of the good things that I've seen, again, none of this we use in the bank, but there's certainly partnership with some of the larger organizations. There are things where AI is being adopted into contact centers. For those who've worked with large banks, the whole quality assurance and QC framework in those is just mind-boggling. Thousands of calls get listened to check we're saying the right things compliantly to customers, but actually a firm that I know are plugged into those contact centers, and what they have are AI tools that as calls develop, there are prompts to say, you haven't done your ID and V yet, do you want to do that? So it's not telling you've done it wrong, it's just trying to support them to be on the compliance side. And when you've got the ability to run every single call through a supporting tool that helps you to remain compliant, actually that the chances of making sure we do all the right things, and it's picking up on things like, elements of dissatisfaction. So making sure that the call handler picks up on some of those cues, vulnerability, things like that. So I definitely think there are tools starting to come out into the market that certainly the big banks are starting to trial. But it doesn't do everything for you. You still need that element of judgment. You need all the training on there. But I guess probably for some of the newer entrants into those workplaces, having something which supports them live and has the resources to do so is actually quite helpful. So again, for me, if you've got the money to do so, there's definitely this stuff out there, but it doesn't solve everything for you. You need to, there's always going to be the human element of that, if that makes sense.
Absolutely.
I would echo what I know I'm just echoing both of you all the way through, but what Ben said, it's about if you're going to invest in one of these tools, it's about the implementation of it and the integration into existing workflows. Everyone just wants to do their job. They don't want to sign into another thing. If you can embed it so that it's again making it easy for everyone to, do their job well, then it could be successful. And equally, I think sometimes you can look at excuse me, you can look at these tools and try and implement them too widely. Actually, the benefit is for, maybe two functions. And if you implement it for those two, then you'll add value to the business. But if you try and make everybody use it, no one will use it, and you don't get that. So I think it's about really thinking how it works with all your other tools, how you're gonna who it's adding value to, whether that's in their day-to-day or whether that's, reporting, whatever it is, and making sure that you've thought that through and committed the resource to embed it properly, and that you know how you're going to demonstrate that it was successful or not. And if it's not, get rid of it. Don't hang on for years and years.
And Davina, I'll just add on to the back of that, Sarah, because a good friend of mine, school friend, he supports firms to adopt AI, and his feedback to me is, people are just going to him and goes, right, how can I use AI? And it's almost like if I'm not in AI, I have to be. It doesn't matter what it is. And I think that talks to both your points in that, you need to have a very clear idea of what it is you're trying to achieve here. Just throwing RegTech or AI or at these things, yes, they will help, but you might end up with something that actually really you don't need. And I think there's this pressure, particularly at the senior levels. If you're not talking about AI, if you're not talking about this stuff, then what are you talking about? And that's creating a process to just have something versus actually, do you need it? So yeah, so just add my 2 cents on top of that.
Thank you for that. That input was very interesting. I think it's also very important to realize that AI and RegTech solutions, they need to stand on a middle ground. It has to offer exactly what organizations are looking for from a defense perspective, from a compliance perspective, but also it's got to feed into what the point is of that solution and what the point is of AI in a controlled environment. So I think that is another talking topic in itself as well. But now turning on to our next topic, which is governance and anti-financial crime frameworks. So the question being, how are you evolving these frameworks to not only meet expectations from a regulatory perspective, but to proactively protect your organizations and, of course, its customers? So I'm going to start off with Sarah for this one. Yeah, floor's yours.
Okay, thanks. Well, I would first of all say that keeping up with the pace of change in threats from an anti-financial crime perspective is a constant challenge. It's something we are thinking about and talking about every single day in our firm. Few different bits here, like there's always an inherent friction between speed of service to a client and making sure that you've got the right controls in place to identify any potential, money laundering or fraud. So those two things, there's an inherent friction there always that you're trying to calibrate. In the kind of fintech sector and PSP and EMI space, we you can see kind of common typologies across firms, and criminals will move from firm to firm, identifying any weaknesses, and then really look to maximize on that, and then move on to the next firm. So, and it tends to be, it's a network. It's not normally just one person. They really operate really well and communicate with each other and tell everybody where the weak spots are. So, you're constantly looking at that, updating your risk assessments, reviewing your controls. What can you do to protect the business against that, but balancing that against not having too many false positives and slowing the business down. It's quite difficult. But I would say for us especially, it's industry events, especially if there are things like consultancy firms, because they see lots and lots of different firms, and they're a really good way to learn what the emerging threats are in that space for your sector, and really, really value internal and external audit reports. Although it's always, a bit of a pain to go through that and lots of work on behalf of the team, the value you get from that, identifying things is really positive and identifies changes that you can make. The other thing that we do a lot of here at IFX specifically is we've got books about compliance and financial crime. We've got podcasts. We've got, there are shows that you can watch on Netflix and other places like that. Just again, it's about mixing up the training, and that helps you think about things from a different perspective. So I've just finished The Big Con by Tony Sales. I don't know if either of you have read that. That was really, really good. It's talking about him as a fraudster and the way that he would approach things. And it helps just give you that angle, because I think in compliance, there's a tendency, you have a tendency to assume that everyone's going to do the right thing, because that's what you would do. So trying to kind of think about it with a different hat on of how could I break this, or if I was a bad person, how would I abuse this, which can be quite fun. So things like that, I think, help us continually advance those frameworks.
Great, thank you for that insight, Sarah. And Melvin, now over to you.
I'm glad it's not just me that uses Netflix for a training. I've just done my ICA diploma in financial crime and was told to watch was it the HSBC cartel one, so Dirty Money. So there we go. It feels odd to be studying but watching Netflix at the same time. But look, similar to my earlier comments, I'll couch my thoughts to align on how we've pivoted our governance and financial crime frameworks to reflect the strategy and journey that we're on in winding down the bank. So kind of starting with governance, probably the most obvious change to adapt the bank's approach is to accommodate that new strategy within the governance framework. It's a fundamental business change. We're essentially stopping what we do, acquiring new customers. So we move from kind of acquisition to maintenance of the books to prepare them for sale. So things like, your product development, your committees, which talk to commercial committees, have been repurposed, which, we still need to talk about the books and things like that, but they've been brought under what's called divisional risk committees, which ensure we've got the risk management and customer elements to them, but also the commercial elements all together. And then what we do is we've created a series of new committees which talks to the delivery of the strategy. So the idea is we're not just bundling everything in once and losing almost the customer element. They're still front and center. And that's essential to make sure that those feeds that go up to the executive and the boards, they get the appropriate levels of escalation of issues, and they don't lose sight on the customer performance, because, as I say, it can always be everything's transformation. How are we moving to migrations, things like that. But at the end of the day, and I said in my earlier answer, we've got a business to run, we've got BAU kind of service to deliver. And one of the things that my team spent a lot of time is trying to align senior managers' accountabilities through SMCR. So I guess as we're delivering our strategy, making sure there aren't any gaps within that framework. So God forbid something does go wrong, everyone's pointing at each other and go, it wasn't me, it was him. And because again, through various enforcement fines, those gaps have been identified in terms of accountability. So very keen to avoid that. We've made updates across 3 lines of defence, so have adapted our structure to introduce more of an integrated assurance plan, which has been great. So my team sit within the compliance monitoring function, sit within the second line. But actually, we've never been as connected in terms of making sure we coordinate what work we're doing in terms of assuring BAU, but also strategy. So we're not tripping up all over the place. I think that's a fairly common executive complaint is, I've had audit in last week, we've got second line coming in and first line are doing stuff. So it's making sure we coordinate of that and don't slow that down, but still managing to maintain that effectiveness and independence of those lines of defence has been really important. So yeah, more collaboration is not a bad thing at all. And from a financial crime perspective, which, look, I'll confess I'm not as close to say to others, but we've had to do a lot of work in terms of delivering an updated financial crime strategy. I think it's fair to say scammers and fraudsters will use things like migration, like a big event transfer, to take the opportunity to engineer instances that exploit vulnerabilities. An example being, as we start to deploy mass comms to customers to say on this date we're going to migrate, that gives license to customers to scammers and fraudsters to send out texts or emails to say your transfer's hasn't gone to plan. Please log into this portal with your details, and we'll transfer your balance or savings over to NatWest. I guess what we've had to do is make sure we need to look ahead and plan for all of this, particularly during migration weekends. That's when we're at our most vulnerable, because everyone's busy looking at stuff, making sure the transfer of data. So I think very much our MLRO and his team have been kind of laser focused on making sure that we update our strategies to take into account of the changing risk profile. So look, plenty of work's been done in all of that stuff, but it's very much how we've had to do wholesale changes in our governance and kind of, and also financial crime. But I'm not so cited on that, so I'll hand over to Ben if that's okay now.
Sure. Yeah, I think like Sarah and Melvin, you really covered most of the bases. One thing I think I should focus on is this word proactive. And I think in our roles in compliance, we spend a lot of time, when we could spend all our time reacting to things that land, and that's a very common thing that we have to deal with. And it requires focus, it requires dedication to focus on the proactive. Here at MIB, we have a compliance plan each year that's focused around the business plan and how we're going to actually help the business deliver on their strategic plan for the year ahead. So we work alongside them and have a plan for compliance. In that, we do horizon scanning. So we're looking forward, seeing what's coming and preparing the business. There's been some legislation changes this year that began with the horizon scanning conversation in the ExCo. We then did a high level. This is what we think the business impact is. We've just finished the full gap analysis, and we're going back with here's where we think the work needs to be done. These are the financial impacts. These are the resource impacts. And having that sort of proactive conversation throughout the year has been invaluable with the ExCo, because they know this is coming, they know we're over it. And then when we come in with there's a cost, there's an impact, they're prepared, that they know that something was going to change. We also do quite a bit of root cause analysis on compliance incidents. We will look each year and we'll do a look at the past 12 months. What has happened in the last 12 months? All of these things that we were reacting to, can we sit down and we sit in the team, we try and understand, is there something we could be doing to prevent, reduce, help assist the business to avoid these future events? So we do a lot of root cause analysis. I should say that we're not directly regulated, although we might appear like a directly regulated entity, which is great. Okay, I've been in directly regulated entities for a long time, and it's a lot easier in terms of, we don't have to deal with the FCA or PRA. However, that being said, we have a membership which is most of the insurance industry, and they are directly regulated. And for things like consumer duty, we're not covered by consumer duty, but we think it's really important that we consider it. So we have a consumer duty program that's running in our organization where we're implementing consumer duty, even though it's not directly applicable regulation. And we've seen through the work we've been doing for the last 2 years a direct sort of impact in terms of the interactions with consumers. Now, just for the folks who are dialing in, we're a not-for-profit. So we're a not-for-profit, and our primary function is to compensate the victims of uninsured driving and hit-and-run driving in the UK. We also provide a number of data services to the insurance industry. So we have a large amount of data, and we do a large amount of claims. So we operate very similarly to an insurance firm without selling premiums. So yeah, we have implemented consumer duty on ourselves, and we've seen actually there's been a really strong and good improvement in terms of our reactions and the interactions with the consumers that we work alongside.
Thank you for that, Ben. It's all very interesting stuff. But on that point, we mentioned a term here of not being regulated and perhaps regulated. Do you think that in terms of having an impact on how compliance frameworks are perhaps implemented, has an impact in culture in terms of the bigger picture? Do you think that has a direct impact on a workforce, on an organization, whether or not they are regulated or not regulated on an official basis? Because I think from a compliance perspective, we have points where we most definitely are regulated. For example, Melvin shedded light on, for example, the audit process, whether you're first line, second line, third line, but also in the industry you work in, Ben, as well, and Sarah, that yes, there are points that you would be regulated on, but others not so much. So do you think this has a direct knock-on effect to cultures within organizations per se?
If that's a question for me, yes, I think it does have an effect. I think having worked in directly regulated entities for a long time, there's a definite maturity, there's a rigor in terms of the way that compliance is managed, is seen, is respected and sort of treated in those sorts of organizations. And to some extent, it's a more difficult conversation in an organization that's not directly regulated. However, I have sort of split my time between both types of businesses, and most commonly implementing a compliance program at the level, even if it's not directly regulated, is a very strong sort of commercial decision and a very strong decision in terms of relationships with other businesses. There's an expectation from our members that we are not deviating massively on these compliance obligations. For example, the critical third parties, operational resilience, those sorts of things are things we are doing. We're not directly regulated in that space, but in our conversations with the membership, they would not see that it's appropriate that we are way behind or way below where they need to be. So we are comfortable having those conversations to say, these are things we're doing, this is the work we've got in flight. We're already doing consumer duty and have been doing it for 2 years. It's a competitive almost conversation when we're having those conversations with the membership or different entities that we work alongside. There's just a general expectation that we know what the expectation is, and we're meeting those.
Thank you for that, Ben. I think that leads us on very nicely to the final topic, and that's resilience. So the third question, regulation is often seen as a burden. How can it be reframed as a foundation for long-term organizational strength and agility? And we're going to start with Melvin on this one.
Fab. Really interesting question. So look, put it out there, the whole regulatory thing, it's pretty complicated, isn't it? Let's face it, if any of you have had the fortune to leaf through the FCA handbook, PRA rulebook, it's definitely not designed to be understood by the person on the street. And I guess that's why we're here. We're there to help interpret, to help keep our firms on the right side and stay within those guardrails. So look, I know this session is about looking past fines, but when the FCA's fines stand at kind of nearly 80 million for this year, it shows that people and firms are still getting it wrong. But I'm a firm believer of that's kind of good news for us, because actually we get to learn from those mistakes. We use those mistakes as opportunities to learn, and educate our colleagues. And I would like to think boards and excos are very interested when a fine comes out. There's a paper quickly circulated on summarized, and and actually reading through full enforcement kind of notices, that gives a blow-by-blow account as to what's failed and kind of what I would prioritize that sometimes you look at if for whatever reason you want to give your management a sense check as to we're okay with this, it's not a problem here. That should be an automatic call for people. So fair enough, you might not want to read 80 pages of that, but I'm pretty sure running it through ChatGPT can give you a pretty good summary. So look, back to the topic, regulation seen as an enabler, not a burden. So I think lesson one is do what we do in day-to-day life and learn from the mistakes that other people have made. Of course, there's significant positives to not getting a whacking great fine. But I think it's fair to say for anybody who's gone through that, and I've seen it on the other end again, putting firms through enforcement, the operation upheaval, management time that it needs, the reputational damage, to be honest, that can be just as impact as a significant fine. So it's best to avoid that. So looking at other areas, I think we've mentioned resilience, operational resilience space. Pretty sure the recent M&S, Jaguar Land Rover immediately come to mind. It's I think between them it's immediately cost them circa nearly £500 million. Wider economic issues talking to nearly 3 million. So this is big stuff. So the benefits of ensuring operational resilience will mean that your critical services can continue in a crisis, whether that be cyber attacks or material system failures. I've worked with people that have been with RBS or Ulster Bank when physically people couldn't get their money for weeks and weeks and weeks, and it's terrible. It's fair to say as banking customers, we all expect uninterrupted access to our money and services. And if we don't, we're the first people to, cause problems. So I definitely think from a resilience that builds confidence, strengthens the retention, and ultimately keeps your brand reputation. And lastly, we're in that place in the market. We're in a market where everything's interconnected, whether that's through external services, third-party suppliers, our partnerships, people that distribute our products, or products we distribute on behalf of others. And I'm pretty sure that, having those partners and it is an important part of many firms' business model and strategies, as as how they operate. So you absolutely want to demonstrate credibility from a reg reputation perspective. Your ability to not be dragging your partners and your firms. If you do have a poor reg kind of reputation, I'm pretty sure that's part and parcel of any due diligence process that you may be doing on a firm is, what does their reg reputation look like? Vice versa, they'll be doing those checks on you. So you really want to, for me, there is an absolute incentive that if your business model, is looking in that direction, you want to make sure that you are staying on the right side of regulation. Because ultimately, probably one of the most precious commodities is your reputation, and it is where it needs to be. So yeah, whilst it can be costly, depending on what you want to do, actually, it can be impactful on your business model, depending on where you want to go and who you want to work with to expand that. So it's pretty important, is what I would say. So, okay, that's me. Happy to hand over.
Thank you for that, Melvin. Over to you, Sarah.
Yeah, I'm going to start by saying I think regulation can be a burden sometimes, especially in smaller firms. I mean, I think depending on where you were when SMCR first came in, quite a lot of the sort of papering of that felt like heavy work, especially in smaller firms. But I think most of the time regulation isn't in conflict with common sense. So things like putting your customers first, that's pretty fundamental to all businesses, I think. Making sure that you've got enough money to run the business. Every business needs that. It doesn't matter if you're regulated or not. So quite a lot of the regulation is just, putting some guardrails. I know we've already used that word, but guardrails around those pretty fundamental things. And operational resilience again, obviously knowing that you've got a stable platform for growth, leave some room for risk, but you need to know what risks you're taking to, drive the business forward, and taking a proactive approach to it. I know we've already used the word proactive as well. So sorry for repeating Ben there, but with compliance as part of the business, and you can anticipate and control risks, much better. So you've got, efficiency, which could be a competitive advantage. And I think one of the things on this that I like to think about, which is going to be a slightly odd analogy, I don't know if any of you are rugby fans, in the 2017 Six Nations, when it was the Italy-England game, and Italy chose not to compete at the breakdown, which meant there was no offline formed and they could be anywhere they wanted to on the pitch. And if you watch that game, England didn't have a clue what was going on. So Italy were playing to the rules, potentially not in the spirit of the game, but to the rules. And ultimately, England did adapt and they won the game. And then afterwards, the rules were clarified to make sure that couldn't happen again. But I think that shows how knowing the rules, whether you agree that what they did was within the spirit of the game or not, it helped you challenge the thinking around how you can apply those rules. So I think, especially in the UK with principles based, I think it's a tough ask for the regulators who have to write these regulations to cover so many different business models, but there is flexibility in that. So I'm not saying we should all be like Italy and be against the spirit of the game, but I'm saying that there, you can look at different angles that you can comply with those regulations, but still make it work for the business for a competitive advantage.
Absolutely, Sarah, and very good analogy as well, I think. Over to you, Ben.
I don't know how much time we have left on this webinar, but I think like when we talk about reframing, I think there's definitely a conversation with the senior leadership around what are we actually talking about, because like compliance and how compliant we are is a vague and abstract concept to our exco at the best of times. We think in terms of maturity, and we measure compliance maturity of the organization. That way we can say, beginning of the year maturity was this number. By doing this strategic plan, which I talked about earlier, and addressing these areas and improving and enhancing the program of compliance, by the end of the year, I can say we've actually improved our maturity, and it gives them a sort of, a numerical value in terms of the value add of the work that we've been doing. On top of that, when I've seen a really, strong compliance program in place, and the business is changing, it's adapting, or new regulations are coming in, we've done the heavy lift, like Sarah mentioned. The initial can be challenging and can be tough, and can actually be why compliance gets such a bad rep. Once it's up and running, it's in place, it's operational, and you will see you can then adapt it very easily. And I've seen this happen with new legislation, or when we moved into new markets when I was in a global business, and it brought in scope new regulations. We were able to say what we've already built is in such a good place. It's a very small change for us to adapt or incorporate or bring this new legislation into scope of the work that we do. So we can say that original investment has actually paid off, because it's not a significant gap analysis regulatory compliance program. It's a change to the way we're already operating, with minimal investment, minimal cost implications. So, and that's always a good conversation to your senior leadership, is this isn't going to be a significant impact because we've done the heavy and hard work already.
No, I definitely agree. I think with all all points of view here. And I think the burdenous element can be, for example, there is a lot to keep up to date with. There's a lot to execute in-house, dependent on which industry you're with, which organization. I think at some point size, yes, it does matter, because a larger organization can have a larger compliance team and more responsibilities. However, it's the smaller organizations that have a scope of responsibility too. So I think in terms of building that organizational strength and agility comes through that learning curve, I guess. And I think it's something, it's almost ever changing, and we have to keep up to date with what's going on in order to learn from that. So on that note, I do want to thank our panelists today for such a thoughtful and engaging discussion. It is clear that strategic compliance is not just about avoiding fines, which I heard Melvin mention as well. It's about building trust, resilience, and a culture that I think supports sustainable growth. At LexisNexis Regulatory Compliance, we are proud to support organisations with our regulatory registers and alerting solutions to navigate this journey with organisations like yours with clarity and confidence. So alternative, if you would like to learn more about our solutions or continue that conversation, please don't hesitate to reach out. But thank you again for joining us today. Take care, and we look forward to seeing you at our future events as well.
Thank you very much, everyone.
Thanks, folks.
Thank you.
So thank you everyone for attending today's webinar. Thank you to our speakers as well. If you have any other questions, please contact aisha.waris@thepaymentsassociation.org. You will receive a survey on the webinar shortly, and we would appreciate if you could complete this and provide your feedback. There will be a QR code up in a minute if you'd like to do it right away. You will also receive a follow-up email within 24 to 48 hours with a link to view a recording of today's webinar. On behalf of the Payments Association and our speakers, thank you for joining us today, and have a great rest of your day.